Good morning, investors. You are now on KleverStock with me, Ainun Jaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia rebounded from last week's losses to open marginally higher today, driven by mild buying interest in selected heavyweights, a dealer said. At 9:10 a.m., the FPM KLCI inched up 0.41 of a point to 1,576.75 from Friday's close of 1,576.34. The benchmark index opened 1.92 points firmer at 1,578.26. However, the market breadth was slightly negative, with decliners leading advancers 161 to 136. A total of 308 counters were unchanged, 1,981 untraded, and 6 suspended. Turnover stood at 83.43 million shares worth 36.44 million ringgit. Tracking the positive performance of Wall Street's index futures, Malacca Securities in Berhad expected the local bourse to start the week positively. Instead, Wall Street ended broadly lower on Friday as weaker retail sales and a sharp rise in inflation expectations pressured the markets. On the geopolitical front, talks between Trump and Putin in Alaska regarding a peace plan for Ukraine concluded without a breakthrough, although Trump struck an optimistic tone. Sector-wise, we believe the construction and utility segments will continue to outperform as IJM recently secured its largest data center project worth 1.4 billion ringgit in Johor, bringing its total order book to 9.2 billion ringgit. Among the heavyweight stocks, Maybank was flat at 9 ringgit and 80 cents, Public Bank fell 1 cent to 4 ringgit and 44 cents, CIMB slipped 3 cents to 7 ringgit and 22 cents, while Tenaga Nasional added 4 cents to 13 ringgit and 66 cents. And RMIHH Healthcare improved 1 cent to 6 ringgit and 83 cents. On the actively traded list, PRG Holdings went up 1 cent to 11 cents. Valesto earned half a cent to 19 cents. Nexi was flat at 39.5 cents, while SFP Tech reduced 1 cent to 14 cents. On the broader market, the IPM Amas Index advanced 3.75 points to 11,734.81. The IPM T100 Index gained 4.42 points to 11,517.28. The IPM Amas Sharia Index secured 15.76 points to 11,670.61. And the FPM Mid 70 Index rose 12.78 points to 16,673.46. While the FPM ACE Index declined 12 points to 4,701.45. Now by sector, the Financial Services Index trimmed 31.71 points to 18,048.36. The Plantation Index bagged 14.96 points to 7,518.99. The Energy Index edged up 1.20 points to 742.03, and the Industrial Products and Services Index shaved 0.19 of a point to 157.53. We should now look at the performance of our local currency. The ringgit opened firmer against the greenback on Monday today amid cautious sentiment over the trajectory of the United States interest rates, said an analyst. At 8 a.m., the local note was slightly higher at 4.2050 or 4.2260 from Friday's close of 4.2085 or 4.2155. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said expectations for a September rate cut are gaining momentum, while the U.S. Federal Reserve anticipated to implement its first interest rate reduction of the year. He said given that consumer spending accounted for more than 2/3 of the U.S. economy, the case for a September rate cut is gaining more steam. The University of Michigan Consumer Sentiment Index, CSI, fell 58.6 points to August versus 61.7 points in the prior month. Other measures such as the Current Condition Index and the Expectation Index also declined during August. He said this suggests that consumer spending will likely weaken, while higher prices due to increased import tariffs may prevent them from splurging. Against this backdrop, the ringgit may revisit the psychological level of 4 ringgit 20 cents today. The impression that the Fed might be behind the curve in cutting interest rate lower seems to weaken the US dollar in the near term. The US dollar index DXY is hovering at 97.850 points. At the opening today, the ringgit was higher against major currencies, but depreciated vis-a-vis the euro to 4.9224 or 4.9470 from Friday's closing of 4.9185 or 4.9267. It strengthened versus the Japanese yen to 2.8557 or 2.8701 and gained against the British pound to 5.6999 or 5.7283. The ringgit also traded firmer against regional peers. It appreciated versus the Singapore dollar to 3.2777 or 3.2944 and rose against the Thai baht to 12.9361 or 13.0091. The local currency also improved against the Philippine peso to 7.36 or 7.41 and was almost flat against the Indonesian rupiah to 260.0 or 261.4. And now moving on to economic updates. Interbank Group of Companies senior palm oil trader Jim Teh said the crude palm oil CPO futures contract on Bursa Malaysia derivatives is expected to trade lower on a technical correction between the range of 3,800 ringgit per ton and 3,950 ringgit per ton. He said this is due to the fact that palm oil stocks for July 2025 rose to a 19-month high of 2.1 million tons and futures price increased due to speculative play by investors. He added, as for physical demand, it will continue to come from China, Pakistan, Middle East, and European Union countries. India is on cautious buying, but likely not much from us as they are diversifying their purchases into other oils at the moment. Another palm oil trader, David Ng, said the CPO market for next week is expected to trade within the bearish bias given by recent price increase, which may deter further buying of palm oil. Ng said we anticipate prices to trade between 4,300 ringgit and 4,450 ringgit per ton. And meanwhile, Palm Oil Analytics co-founder and senior analyst Satya Varka said market sentiment could be positive for the CPO market as buying momentum accelerated in the second session on Friday, fueled by bullish export data for August. He said Cargo Surveyor Intertech Testing Services ITS reported that exports for the first half of the month were up to 16%, while AmSpec reported an increase of 21% compared with the same period in July. He added, next week the market will be focused on August 1st to 20 production data. On a weekly basis, the August contract rose 124 ringgit to 4,338 per ton. September 2025 gained 191 ringgit to 4,425 ringgit per ton. And October 2025 soared 227 to 4,427 ringgit per ton. The November 2025 contract advanced 237 ringgit to 4,511 per ton. December was up to 244 to 4,528 per ton, while January 2026 climbed 237 ringgit to 4,526 ringgit per ton. The weekly trading volume increased to 472,033 lots from 354,336 lots last week, while open interest eased to 249,718 contracts from 311,976 contracts. The physical CPO price for August South advanced 150 ringgit to 4,400 ringgit per ton. And now moving on to corporate news updates. Heineken Malaysia Berhad is reassuring investors of its long-term growth trajectory even as near-term earnings come under pressure from softer consumer demand and rising costs. The brewer cost a net profit of 83 billion ringgit for the second quarter, down 8.39% from 91 million ringgit a year earlier on the back of softer revenue and rising cost. Revenue slipped 5% to 539.7 million ringgit from 565.5 million ringgit. For the first half of financial year 2025, net profit eased 4.96% to 205 million ringgit versus 213.6 million ringgit a year ago, while the revenue declined 3.79% to 1.3 billion ringgit from 1.35 billion ringgit. Heineken Malaysia declared a single-tier interim dividend of 40 cents per share, payable on October 30th, underlining its commitment to shareholder returns despite the softer earnings trend. In a statement, Heineken Malaysia said this performance reflects a combination of more measured consumer demand and the continued strategic investments in digital infrastructure and commercial initiatives to support long-term growth in line with its evergreen strategy to future-proof the business. Managing Director Martin van Quillen said the first 6 months of 2025 have been marked by a dynamic and evolving market landscape. He said the group remains firmly anchored by its evergreen strategy, which prioritizes a balanced top-line expansion, profitability, and capital efficiency alongside sustainability and responsible business practices. This integrated approach allows the company to deliver long-term value to shareholders and stakeholders to contributing to Malaysia's broader socio-economic progress. Heineken Malaysia stressed that continued investment in digital infrastructure and data-driven decision-making and modern work practices will be critical in maintaining competitiveness and building resilience. He said, although we have a moderation in consumer demand following the festive season and more cautious spending, our focus remains clear as we are committed to delivering our evergreen strategy. We will continue investing in our core brands and driving innovation through impactful activations that deepen engagement and connection with our customers. And finally, wrapping up, we have major corporate developments and deals across Malaysia. First up, we have Genting Malaysia Berhad, which will undertake a 2.2 billion ringgit restructuring of its US unit Empire Resorts Inc. after taking full control of the loss-making company. And next, IGM Corporation Berhad has secured a 1.4 billion contract to build a large-scale data center in Johor Bahru. And next, Celcom Digi Berhad, Maxis Berhad, and YTL Power International Berhad have each provided additional shareholders advances of 116.7 million ringgit to Digital Nasional Berhad. Vantress Energy Berhad, formerly known as Sapura Energy, has signed an agreement with the Ministry of Finance-owned company for a cash injection of up to 1.1 billion ringgit to settle payments to its Malaysian vendors. And last but not least, Johor Plantations Group Berhad has issued its inaugural sustainability Sukuk Wakalah Islamic medium-term notes amounting to 2 million ringgit in nominal value under its second series Sukuk Wakalah IMTN program. Well, that's a wrap for more development updates with me, Anujaria on and KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.